Going good. Risk free. So about the connection, because it just happens. Still holding one contract. Moving my stop. You took this? Have you took this? Yeah, anyone take this trade? Show me some W. 2R. Yeah, one more earlier on. Yeah. Longer at the previous daily low. Yeah, so 2 wins. Good. Now this is inversion. Previous weekly high is still on target. Yeah. Like I said, at least we have a clean power of 3. Do you mean high time frame? Depends which time frame you're talking about. So we have a look at see this the daily open here. Accumulation, manipulation, expansion. Right? So like this. Yeah. open. Maybe close. Depends how high we go. If we go to previous weekly low, weekly high. Now this. At the moment we have a SMT. It looks like a short. Version, change in state delivery, do this, and this. From a higher time frame wise, we have a bearish SMT. I'm not sure it's gonna hold. Depend how ES was doing. Can be a fake one. If ES take out the previous daily high, then the daily volume balance is next. On the 1 minute is looks like it's dropping, but not on the 5 minute. 5 minute you need to close below this low, below this order block. To confirm the drop. Yeah. And dog price is tap it, so I think price will come back to it, but I don't think this week. This week depends how ES we're doing. Yeah, that's a daily level SMT, so if you're looking, if this is confirmed, then the next daily candle will targeting this low and this gap. Now this drop is coming. 11:30. Did I say about the 11:30 before? Yeah. I said it before, 11:30. It will be a stop hunt, and whoever longed the whole up move, like a free ride, right? Now it's coming back to get them. Wait for the 5 minutes to close the candle below here. Otherwise, it's just respecting the bullish order flow. Retrace back into the order block. Yeah, you need a 5 minute. Otherwise, 1 minute is not gonna be strong enough. Because if you look at the 1 minute, it already done the move. This wick trades all the way back into this busy. Now this is balanced. So price need to show a little bit more commitment to close the body below this order block. Then the next target is this 10 AM low. Then first percent of fair value gap. And price usually will just tap and go up again. This 5 minute did a displacement, close below a fair value gap, and then you wait for price to come back up and bumped this order block wicket, and then fail, and then you can enter. Otherwise, I'm not too sure, because I've seen so many this kind of drop. Really is try to grab more stops to go higher. Now this 1 minute 11:04, 1 minute busy, turn into inversion. The 11:31 candle has to close below. Then you will have to drop at least. Take out these equal lows. No more trade for me, but I will keep the stream on for a bit longer today, because I think there will be some more price action coming up to take out some sell stops. This is not working. Dollar's pumping back up, hence the drop. Guys, final chance to get your Apex account today. 90% off, massive 90% off. if you're planning to get them in the future, might as well take the advantage and get it today, because I think Apex is not always going to offer 90%. Usually it's 80%. Yeah, basically you pay like $16, $17 for a 50k account, yeah, for the first month, and the next month is 80% off. It's 33, something like that. When you pass it, then you pay for activation fee. Then you don't have to pay for monthly subscription. But if you cannot pass it, say this month you cannot pass it, then the next month they will charge you. If you were in a drawdown, say you have a little bit of drawdown, if next month they will reset it for you. But if you're in green, they won't reset it. Basically you just build it up, you take your time, hit the profit target. 50k accounts, I think it's 3k. You did 3k profit target. It's not hard. I don't think you need big accounts. You just did a 50k accounts because the profit target is lower. 3k. Think about it. If you make 200 to 300 a day, it take you 10 days to achieve it. If you know what you are doing, and you can have as much as 20 accounts. You can massively lower your risk. Basically, don't take prop firms like a one hit and lottery, things like that. Use it properly. Trade micros only. 1 to 2 maximum. Then you won't have any problem. Look, it's like this. You buy a prop firm's account. Say they give you say a 50k accounts. Basically, you got the 50k buying power. I don't know if you guys have trade live account. Which I have, because for a live account you need to put your money in and each broker will charge you money for the margin. Usually a discount broker like the one I used called AMP Future, you need at least $1,000 for e-mini contract for to secure a margin. If you don't, at least so let's say for $1,000 for e-mini, then you at least you need to have like $3,000 in your account to be able to buy one contract, right? Because they're gonna hold your 1k for the margin, and then you got only 2k left, because that's a 3 minus 1, right? 2k left for the drawdown, right? So you do the math. If you buy a prop firm account, which is a 50k account, for $16, then they will give you the 50k buying power, which is, I think Apex is allowed 10 contracts, but you must not use all the 10 contracts. That's gonna blow your account straight away. But you can take advantage of it. You can use it on micros, right? So you have 50k buying powers. They give you 2.5 drawdown. So which is, if you lose 2.5, you lose the account. So basically you're paying $17 for 2.5 capital. Yeah, you think about that. Because if you put 2.5 in your real account, if you lose it, then you lose it, right? But you lose the real 2.5 grand. But instead of losing your real $2,500, you just lose $17. basically like that. Okay, of course they have rules, not like if you're trading your own capital that you have no rules, but rules are good for traders like us because we need the parameters to work around with, like a daily drawdown, like consistency rules, things like that. How much do I get paid? What do you mean? Oh yeah, you need to make 3k to pass it. Okay, so once you pass it, then you're funded. When you're funded, you need to make at least 2,600 in your account to be able to withdraw. You read the go to the website. I already sent a link today in the chat. Go to the free FAQ and then you type in payouts, and they will list all the rules for the payouts. You need to have at least, like, I would say 3k. Yeah, make it say 3k, then you can take like 500 each account, something like that. They have a safety net. I think it's can't remember how much. 2,500. They will let you withdraw. Yeah. Basically, a lot of traders, they just work their account up to so they can request that 2k payouts for the 50k. The 50k account, your max payout for 10 trading days is 2k. So a lot of traders, they just build up their account to 4, maybe 5k, and then you request that 2k payouts. You're leaving like 3k's in your cushion to trade with. So a lot of traders, they're using 20, and then each account they request 2k, so you do the math, 2,000 times 20, that's 40,000. Yeah, you definitely need to check out the rules. You need to read the rules because they have a consistency rules. You need to do the math. Yeah, there are 2 traders, they recently got 2.5 million payouts each. That's why they are doing the 90% off discount, try to bump the sales. Yeah, feel free to join if you're up for it. I shared the long in the Signal group in the chat today when price took this previous daily low, because I was aiming for the power of 3 today. I watched the whole drops during the Asia and the London, and I already marked out the previous daily low. So once I saw that sweep and then the trading sale delivery, I took the long. Well, my time is Asia time is my time, right? So I get up in the morning, I can see the Asia price action, but I cannot trade it because I'm busy. And London, I usually am out, not at home during the London time. But I basically I'm monitoring the chart all the time. If I see something really good, then I will try to find something, really. But sometimes London is quite hard to trade because they are slow and lots of wicks. You see the wicks? Yeah, but if something really clean, then I can take it. And then it's the New York AM Otherwise, I usually I won't stay up for the New York PM because that's too late for me because I have 12-hour difference. New York time is 11:30. Now I'm 11:30 PM. For a very long time, I think 3-4 years. I started off with trading crypto. Yeah, usually I can stay up till 1, maybe 2 if the price action is good. But usually I'm not gonna stay for that late because the PM is quite tricky sometimes. Yeah, I think most of people started with crypto. I luckily I got in. It's not lucky. First part is lucky. Got in the blue one, the 69k BTC. Yeah, I took advantage of that 69k BTC. I remember, if I can remember, belonged from 40 something to 69. I got out from 69. I still remember that day because I was following some influencer from the YouTube because they are getting very hyped up that day when BTC hit 69k. They all went live and watch it, and I was there watching the live, and then hit 69, and then I just close all my position. Well, the first part was lucky, and then came the bear market. Basically, everybody just gave it all back, right? I remember I shorted it as well. I shorted it from, I think it's the first drop to 69 to 50 something. I shorted it, made a lot of money, and then I thought I was good. Yeah, and then gradually give it all back because the bear market, everything just rise and then drop, rise and drop, rise and drop, right? And then I came across this some YouTuber talking about ICT. Then I started learning ICT. Then it completely changed. Yeah, changed my trading style. I used to trade with support and resistance and patterns, wedges and things like that, EMAs, yeah, and indicators. But after I studied ICT, first 2 years is too difficult, seriously. You win some and you lose some, and then you win some and you lose some, and then you start losing faith on ICT. You think it's bullshit, and then you get back to the old ways, and then doesn't work, and then you went back study more. So a lot of back and forth. Yeah, now I recently I found it like I finally understand all his stuff. Because I think you need to do a lot of charting, screen time, reading, even though you're not trading. Like now, the 1 minute you read each candle print, because price is fractal, let's say the power of 3 happens on a daily, it happens on a 1 minute, right? So you see a 1 minute candle opens, the wick, and then come down, and then come back up. That's a power of 3. It really changed my way to look at the candle bodies using ICT power 3. Yeah, a lot of people misunderstand ICT concept. A lot of people just think ICT concept is all about fair value gaps, all the blocks. Like I saw so many people talk about fair value gap order blocks, but the truth lies in his concept is the power of 3 and time. A lot of traders, they don't talk about time. Only the good traders talk about time, because the price is run on time. If time is not allowed the price to do certain things, price will just consolidate and chop. Yeah, the macros, also time. You think about people only, if you just concentrate time on the macros, you're missing a lot. Basically, open, a candle open is the time, a candle close is the time, right? So you think about the 15 minutes, you have 4 candles for an hour, right? It form hourly candle have 4 15-minute candle, right? So each 15 minutes is still the time, and also the 30 minutes, that's the time. So hourly candle, that's the time, right? So that's why every day you hear me say we wait for the 10 a.m. 4-hour candle open. That's time, because the 6 a.m. candle, the whole 6 a.m. candle can be the manipulation, because that 4-hour 6 a.m. candle, it has the 8:30 high impact news inside, right? So all the news happen, most of the high impact news happen during the 8:30. So within that 6 a.m. 4-hour candle, that's a manipulation leg. So you take it to a daily level on the power of 3. You got the 2 a.m. candle with 4-hour candle, which is a accumulation. Then you have a 6 a.m. 4-hour candle, which is a manipulation. Then you surely the 10 a.m. is the expansion. That's why you will see, you go back to the chart, you open the 4-hour chart, you check on every single 4-hour 10 a.m. 4-hour candle, you will see the usually will have a larger body or a larger wick, a longer wick. Yeah, because that's most of the price action happen during that 10 a.m. 4-hour period. Yeah, this is time, because oftentimes people just focusing on the macro times, right? Because it's easier, you got indicator, but each candle contains the time. Yeah, so the longer the time is, the larger the range is, right? That's why you have the 4-hour 10 a.m. 4-hour with such a large range, because the time is larger. Yeah, so if you got stuck in the 1 minute all the time, which you will get chopped up, right? But if you are trading, say you are trading on a 1 hour or 4 hour, you won't get chopped up, right? The weekly, yes, the weekly, you usually use it as a bias for the long-term period, because you see the weekly, we turn on a weekly. This is an institution level. Think about that, because institution use weekly and daily candle. They will never go into lower time frame. They are only going to lower time frame with their algorithm, because the algorithm works on the very lower time frame, like the 5 seconds, 1 second, 10 seconds. But majority of the smart money, they will use it. They will put their orders on the big numbers and using the weekly level. So big numbers is always at the institution level. Okay. For the weekly, we look at the power of 3. Like this week, we have a weekly open here. You can see. Yeah. And what the price did do? Price went down, took previous weekly low, right? And it came back up. Now where is it going? Previously high. Accumulation, manipulation, distribution. Yeah? That's the weekly power 3. So when you open your chart, when you look, so that's why Sunday is important. When Sunday market opened, we can see, we can anticipate the whole week, how the week gonna plan out. We have a plan, we form a plan, we look at the weekly level and see where are the obvious liquidity pool, right? I'm sure during the Sunday open, I think it's around here, and without taking the lows, I set it on Sunday. I'm expecting a gap low to take out some sell side, because the price is so close. It was here somewhere, and it did. It took the previous weekly low and went a lot deeper. This is what NQ likes to do. It likes to go really deep. Sometimes it can go all the way down and come back up with a long wick. This is NQ. If you look at ES, it's different. And then once we saw that, then my bias will be focused on the buy side, because the sell sides are clear. And because during the Trump the trade war thing, price already went down so much. This week, this April 7 week, this whole weekly candle, you see, already traded to the old lows, tap the high time frame PTS. You see, this is a weekly busy, so I'm expecting this can hold for the short term. So price did come back up, all the way up, tap this wick, right, and then consolidate inside. We have 2 weeks consolidating inside this whole weekly candle. And then once you got your weekly level, and then you turn to the daily level. And like I said, the Monday we have a gap down open, traded all the way down. Yeah, you need to keep it on, because that's the continuation contract. Because every time we have a contract change, the price will jump. You have a huge gap. If you turn that on, they will just adjust it for you to up to date. Otherwise, your price won't be up to date, and it will be off. So the Monday come down, sweep the previous weekly low, right? And usually as on a retail level. Retail will look at this as a break of structure, and they will look for long short, because price make a lower low, right? Once they think this is breaking, and then they will short from the breakdown. That's why you will see Tuesday open. You see the candle open right here, same as the Monday close, right? Wick a little bit, not even into the constant encouragement of this daily wick. This indicates price has no interest in it, has no interest in here. Otherwise price will just go tap and maybe trade lower, right? Take out the Monday low. No, price decides to go up. What did it do? We have a new week opening gap, yeah, and price trade all the way up, take out Monday high, and then we have a news about the trade war, the ease on the tariffs. So next day we have a gap open, huge gap open, already took out this high, right? And then price work its way to this. Like I said, I posted in the Discord about this volume imbalance. When you see a volume imbalance in the chart, always mark it out, because price will go there. Because there are no body candle bodies over these wicks, price will do is print a body candle body over it to complete this task. This is the way the algorithm works. It has to do something. It must do. So when this ever happen, it will go there, no matter what, no matter where price is. Right? You see, price is down here. What it did, it go all the way back up and fill this gap. So now we have one more here. But you probably will ask me why there's a volume balance. There's a set button here. That's a settlement on the daily interval. The settlement price. You press that, the gap will reveal itself. See? You have a volume imbalance here. If you don't turn that off, you turn it off, you won't see it. But usually we keep it off. Right? ICT taught us. I can't remember which video, but I'm sure I watched it. He told us how to do it. Basically, you just toggle through this to find the bigger gap, and you mark that out, and then you turn it back off. So now price is heading towards this volume imbalance. It's like a magnet pulling price to it. And all this drop, see that drop? It's just another trap to grab more sell stops. Not this one. See? Most of the part it's got no body to print over it. ICT said no, like this. You keep it open like this. Need the body to print over this. 9. Only this part. Yeah, it needs a body, not a wick. And one more thing on the, you turn on the 4 hour, turn on the regular trading hour, and you will see a gap, right, from this close to this open. What do we have? A regular trading hour gap. Yeah. So always like this, the gap like a void, no wick, no body candles, that's the strongest. And then is the volume imbalance, just wicks, no body candles, just 2 wicks touching, that's the second strongest. And then it's a fair value gap. So you have 3 PD arrays like this, the void, which no wick, no body, then the just the wicks, 2 wicks, volume imbalance, and then the normal fair value gap. And in terms of fair value gap, the strongest one is the balanced price range. Because fair value gap will fail, right? We've seen so many times fair value gap failed, but the strong one, you usually find them. This video will be recorded, right? You can go back and watch it. Yeah, go back and watch it. It will be on the YouTube. Usually when you see a reversal, you will see something like this, 2 candle bodies overlapping with no other candle body next to it. That's a BPR. See this BPR? See how price respecting this? Once the BPRs appears, these price action, price has no interest in it. You see that? It usually form in during the reversal. If you see, when it's a reversal, when price sweep some liquidity and then reverse, and then you saw this BPR, most of the time price will leave it or just tap it like this, and boom, just go for quite some times, for a very long time. Look, and never come back to it. Yeah, see, I never come back to it. Here, do we have one? Yeah, this one. Here, you see this candle come up, come back down. Only this one and this one, nothing in between. And BPR. And what price did? Look, break down, never come back up, right? Break down, see, break all the way down, and then now it's coming back up. See? Yeah. So yeah, this is the type of things that we look for. You see, there's one more BPR here. Then this drop will be more legit than this one. This one you just have a inversion, fair value gap. This one have a BPR. Once you saw that, you probably will get in from. It's too late. We don't get in now. It's tracing. We have also have a inversion. So you have two PTOAs lining up, right? Because ICT taught us that we need three, at least three. So a level swept, we have a daily, previous daily high is swept, right? A major liquidity pool is swept, and then you have one BPR and then an inversion. That's enough for short. So basically you will get in from there, you place your stop loss just be above this BPR, 25 points stop loss. Then you aim for, I don't know, 3 hours, this low or this equal lows for partials. And aim for this low. And then you monitor how the trade is going on, because when you get in from here, you are already in green with 0 drawdown, right? And then you sort of trail your stop to lower your risk to maybe 5 points, just above this inversion. And then once price tap goes below here, then you take a partial, you move your stop loss to break even, and then just let it run. This is how to properly manage your trade. Instead of have a fixed stop loss, you usually it's better off to use a dynamic one when you're trading NQ, because the price is changing all the time. This drop, because it's a 1 minute, so like I said, 1 minute is not very strong, because on the 5 you have nothing, no change in sale delivery on the 5. The price is still stuck inside this order block. So for 1 minute, this drop is probably just a purge, right? Stop out all these shorts and then come back down and kind of sweep some sell stops for like a bigger range of consolidation before the next move. They're literally building up liquidity, right? Because you are building buy stop here, you're building sell stop here, because traders are going to commit when they see something like this. They see a big drop, they short. They see a pump, they long, right? And then they place a stop loss just like here on over this low, below this low. So and the algorithm will just, this is called consolidation, right? Time distortion. Because price, you look at on the 5 minute or 15 minutes, what price is doing for the 2 hours. From 10:45, from 10:30, price basically is doing nothing. It's just go up, go down, come up, come down, come up, come down, right? And people shorting here, they are hoping price is holding, and people long here, they're hoping price is holding, right? So already people shorted here, put their stop loss here, got stopped out by this wick. And people who longed, they probably got stopped out by this wick, right? And now, what they want to do, they want to get back in. They want a revenge. Because they think, hey, come on, price is at the very key level, resistance. Yeah? This is a strong resistance. Yeah? Being kept the price low. So what they do is they will short again. They saw this drop, they should short again. how price is coming back up. If you think yourself is we all retail trader really, but we are the retail trader using ICT concept. If you think you are not an ICT trader, what are we gonna do? Like your old self, the one that a long time ago, right? You're probably going to short here. A lot of people think this is a swing fail. Doji candle, this one indicate a strong sell, seller step in, controlling the market, blah blah blah. Yeah. What price is really doing is engineering more liquidity. So when price is stopped, like this, when price has stopped, it means price think, hang on, there's no more stop to run, because during this whole price leg up, price already eating so many people that who shorted from yesterday here. Yeah, so all these buy stops has been eaten. That's why price is stopping here, because it's one trader to commit to get back in, because the price already knocked out all these short sellers. There's no more buy stop here for the smart money to sell, because smart money they need to sell. When sell into these people are willing to buy higher, right? So they will sell high, keep selling higher to realize their profits. That's why price is stopping, because they want traders to open their short. Once they open their short, they will put their buy stop here, so more people are willing to buy higher, and then for smart money to sell higher, because smart money bought it from here. Yeah, because why? Because traders long. Why they long? Because Trump said the pause on the tariffs, right? This whole leg up, people buy, sell stop. So smart money want to buy low, people selling low. Yeah, so they bring the price up, building the buy stop, bring the price down to buy lower, for the price to run back up to sell high, to make money on retail traders. This is how price work. You don't need indicators or depth of markets, things like that to really, or heat maps to look at it. You just look at the candlesticks. Why price is letting traders to do that? To build up liquidity. When price is trending like this, look at all these, basically whoever long here, they are laughing, right? Yeah, if you long here, you'll be laughing, right? Because price never came back to their stops. See, all the way up here. But what price did? Reach a higher time frame level, and then drop, because smart money was selling here. They push the price down. Now these stops are there for them to buy. Price is constantly doing this all the time, every day. every minute, every hour, every minute, every second. And you notice, this is another thing you notice, time 12 p.m. lunchtime, right? What price is doing? It's pulling. Why? Because a lot of people, a lot of traders, they went to lunch. They are not in their office, right? And price is doing that. Because whoever shorted here they think price is going to break down, but not. The algorithm will spool and take out the closest liquidity pool. Whoever is making money at the moment, the algo will know, because it remembers. That's why we don't take any position during the lunch time. So if you are long or short during the AM section, unless your stop loss is very far away, you close it. Say you long from 10 AM, you probably will close it before even like 11:30, before the lunch macro starts, to realize your profit. And then if you are okay, you come back at PM, or you call it a day, unless you're long it like way before market open, like during the London. Otherwise, that's most of the price action will be erased. If not, the lunch will be PM will do that. Yes, still not taking, but it will do. I think it will, because price took the previous daily low, it should go for the previous daily high. If no, there's one more, because the no more, because previous weekly high is gone. Yeah, then there will be level, and then like I said, the volume imbalance is why is pulling price, because the algorithm won't allow any imbalances on the books. It has to offer the fair value. So when there's a gap, if you I know I don't use book maps and what's it called, the depth of the market, I don't use it, but I know that if there's a certain pockets, like empty space in the, because price went so aggressively, right? This drop from here to here, it has no orders here, and it's imbalanced. So price will need to fill this hole to complete this task. So usually this is why the void, liquidity void, the gap, it may not, you need to, for that to come down. If you're asking that question, you need to monitor how price doing it in a lower time frame. When they trade to the consequent crashment, always mark out the halfway of anything, a candle, a body candle, a wick, or a gap, because that's the most sensitive area level. Is the midpoint. Why is the midpoint? I think it's to do with the algorithm, because everything has to be balanced, right? So the mid of something, that's the balance, right? It may react to it. Sometimes it reacts to it for 10 minutes. You will see a short-term drop like this, like these kind of drops, like how do I say, like this. Yeah, it's logical. So when the price hit the previous daily high, like this, we have a from 1038 to 1048, we have a 10-minute drop. So price will react to it, but for maybe for a short period of time, like this one, 10-minute drop. Some people can take advantage of that. 10 minutes is enough, because how many points? We're talking 90 points. It's more than enough. If you don't have to catch a whole move, you catch half of it, that's like 45 points, right? That's more than enough. We only look for 50 points a day, yeah? So, yeah. So, you need to monitor the lower time frame price action, because that's for the confirmation, for the confirmation for the entry. But once price is done its stuff, like this drop, and then it carry on, right? Carry on higher, because it has its target up here. So what it did is, it hit his first target, it come back, sort of like recoil, right? Like it spent all this energy there and come back to recharge and then move on. I never trust the EMA, because that's thing about all the indicators you're looking is like how to say, it's like a work done. It's like a body candle has to print first before EMA has to print, right? So it's just following the price action. It's not lagging. It's not following the candle. Is has to wait for the, say you got a 1 minute candle, it's not printing, so you're not going to know where that EMA is going to print, right? It has to wait for the whole 1 minute candle to finish, then it will print the next minute line, the EMA line, right? So you're not looking at, it's not indicating anything, it's just telling you what's already happened. Why people are saying that certain price is hitting like bring up and then so I can explain, but I don't use it. I don't know how to use it. It's a very long time. 50. Yeah. Right. A lot of people say, okay, 50 EMA is like you're riding the trend, right? This is the trend. But look at now. Where is the next candle gonna be? Because you never know. Because this 1 minute can drop like this, take out this. We have seen it so many times, and the EMA is still doing this, yeah. So it's not really giving it any indication for the next candle to come. See that? Now look at that candle. Is the EMA going to tell us anything? No. Yeah, you probably going to say, oh yeah, because it's above price, but that's just luck, really. This candle can go down because we are on the uptrend. We don't really need this EMA to know that the previous weekly high is the next target, right? If it's if you're using this, it's sort of like not for sure. You're based on guessing, you know, more like you have a proper target, right? And also on the high time frame, I think if you think the daily, yeah, try on the daily. Make it red. Okay. So daily is even harder to trade. Look at now. The price is so far away from the red is 50, the 200 is there. How am I going to use it? It's not giving me anything because let's say you don't know anything about these 3 bullish candle, okay? Now you got a death cross. Yeah, death cross, I know. And price broke down. But look at this bullish daily candle. It's gonna rip all these people who shorted here based on this death cross, right? This bullish candle itself already wrecked 1, 2, 3, 4 days of traders who shorted it, hoping it's going to go to this low, 15,000. 15,000, yeah. And from here, all this consolidation, this has nothing to do with, you have no, it's not indicating anything that about this consolidation, yeah. Even this one, this cross, same, this death cross. Yeah, look, price drop and then rip all the way back up without even 2 EMA crossing, and take out all these people who shorted here. Yeah, but it took how many days? The whole, probably half a month, 2 weeks to do that. Yeah, but then how high it will go? If you are based on the previous performance, then how high will it go? From a dead cross, it drop. Okay, wait. Yeah, you can use a fib level. Here's a dead cross, this candle. drop 8.72%, and then pump another 15%. This drop is already 18%. I think without the EMA, okay, this high for higher time frame purpose, this high, I'm looking at this high and this, because if you think about, this is the last up candle before the whole down move, so this is market maker sell model. From this consolidation and then drop, and now to match the market maker sell model, we have a market maker buy model. Where price will go to the original consolidation here. Before the drop, this one. So yeah, to complete the buy model, more likely price will do that. Like this. Turn on the 4 hour. You see the consolidation. Yeah, done. Objective done for today. PM we get a pullback. I'm not sure about all-time highs. I'm only focusing on remember the there's a thing called IPTA. I'm not sure you guys know IPTA. Interbank price delivery algorithm. Yeah, it's called interbank price delivery algorithm. Basically, it's IPTA. You have 20, 40, and 60. Yeah, basically it's IPTA 20 means IPTA 20 days look back, and 40 days look back, and 60 days look back. Yeah, basically it's 20 days, that's like a month, 40 days, that's 2 months, because 5 trading days, right? So 20 days for each month, so you have 3 months look back. The algorithm only look back 3 months time for liquidity, because it remembers. So 3 months ago 1, 2, 3. This high. Usually I'm not using IPTA 60 because usually I just use 40, 20. 20 is next month high is here. Price already swept the low, previous Monday low with a long wick. So this is a long-term target. This one. So we need to, but that's too far away. We need to concentrate on the, because on the weekly level, 1 week, 2 weeks, 3 weeks look back. 1, 2, 3. This is your 3 weeks look back. This high. This is what I usually do. I'll just look for a 3 weeks look back high and IPTA 20 and 40 because there's no point to forecast something that's far away, like all-time highs or all-time lows. There's no point because price gonna get, if price gonna get there, it's gonna go there like a steps, right? So it will create a higher high, a high low, and a high high, high low, things like that. So you just work your way towards it. So if price is gonna go to all-time high again, I'm not too worried about is it going to go there, because things like that, if price want to go to all-time high, it can still make a lower low and then go to all-time high. So even though it's going to all-time high, but it's gonna knock out everybody before it's going to all-time high, right? Yeah. So there's no point to think about targets that far away. So you only focus on the last week, and the most is 3 weeks away, 3 weeks ago, yeah, and then you anticipate where next week probably gonna go. I think that's far enough. Like this week we'll make a Monday low and then we'll form a Thursday high. It's a typical ICT buy week. Yeah, early week we form a low of the week and then just buy, and then we have a Wednesday consolidation. It's a typical buy week. It's a classic buy week. So if you know your weekly profile, if you go on Google, you Google about ICT weekly profile, then you will find a lot of charts laid out what is what. You have a buy week, you have a sell week, you have a news week, like midweek reversal, like CPI week, yeah, and non-farm payroll week, yeah, that type of profile. So you can base on that, and then you can frame your whole week. You don't have to trade every day. Sometimes you should trade the midweek reversal if you know what you are doing. If you know, say you have your last week we have a consolidation week, and then this low formed during the Trump news announcement. And this week, if you know your target is up here, you probably just need to trade Monday, right? You swing trade on Monday. You buy this turtle soup without even know any change of structure or fair value gaps. It's basically based on sweeping a major low, major liquidity pool, and then you bought this, place your stop loss just below here, Monday low, because that's your invalidation, because you are looking for a previous weekly high. So your invalidation is simple. So what price did is never came back to your entry. If price take you out, you are wrong. You accept it, you move on, you journal, and then find out what you did wrong, why it didn't pan out, right? And then move on. But most of the time, if your win rate is high, your win rate is over 50%, then why not trust yourself? Sometimes this trading is so simple. You don't need to complicate things. Keep it simple. Yeah? You think that's your trade, then go for it, and then just manage your trade, put a proper stop loss, don't oversize. Make sure if this one doesn't work, that doesn't matter. Yeah, that's why I always said to trade size down. Don't try to aim for home runs. Try to build up compounding. Yeah, and it shouldn't be a problem, because it's all about the math, really. It's a game of mathematics. If you're not good at mathematics, I mean the basic, it shouldn't be trading. Yeah, because a lot of people, like, they don't have a clue. They don't know when to buy, when to sell. They don't know, are they buying at a premium or they selling at a discount? Yeah, because that's basic maths. You're not good at math, then yeah, that's something you need to work on before start thinking about trading, because it's a numbers game. Because you need to know when how to minimize your losses and maximize your profits, right? So a good R trade, 2R, 3R, it should be enough. If you keep making 2Rs and 3Rs, there's no problem. Your win rate is over 60%, you should be making money. Because the math is supporting it, because you can't deny that. So now price will do is chop a bit more and wait for, I think, 2 p.m. candle, 4-hour candle. We'll see. The 4-hour candle may do a open high, low, close like this. Yeah, okay, I think that's about it today. Yeah, my target is reached, has been reached, and managed to pull this one. unfortunately we missed the whole move because it didn't give any entry points. Look at this, it's just spooling up. The reason why I think is the manipulation was already done during the London time. This is the whole drop is a manipulation. Prior to this pump, so I was expecting more at 8:30. I was waiting for a purge. This sell stop here at 8:30. I'm expecting an employment claim. What's London hours? 2 a.m. to 5 a.m. Eastern time. That's the London section. Yeah, it's alright. Let me see. You can use the indicator to map out the London time. Yeah. On the chart, you got the Asia time and the London and the New York. Okay, that's I think that's all for today. Yeah, if you like, you can join our Discord. If you haven't joined, and any question, just ask in the Discord. I'll try to answer it. Yeah, I will try to answer it. If you want signals, you can join my signal service. At the moment, long ETH already hit my this long already hit almost hit my TV4, hit my TV1, TV2, TV3. This is a signal I gave in the VIP group, and this is the second one. No, there's no free trial. I mean, I do this like almost every day, and you can see me post it on X. I think it's enough. There's no point for a free trial, because the work I do, this requires a lot of work. If you're serious, join, and then I will do all the hard work for you. Euro's coming back up. This thing, I was trying to long here, but I closed it because it dropped. I was thinking I'm looking for this DXY to go to this previous daily low. Now it's moving up. Cable is going to hit this equal highs, I think. Yeah, sometimes you need to, because I don't want to open a free trial, because I want people to have at least the courage to invest, because this is a world of investing, right? Anything you pay for, you're investing. If you don't risk, there's no reward. So I want people to risk, and they will get your reward. Yeah, same as trading, you have to risk, otherwise there's no reward. Okay, that's all for today. Thanks for joining today. Sorry for the earlier disconnection. If you have if you took that long, that well done. Okay, so I will see you tomorrow. Okay, bye bye now. Thanks. Oh yeah, please hit the like button for me. Thanks a lot. Bye.